how exposed are you to FTX? You've been listed as a creditor, and you're helping to find assets in bankruptcy.
Thanks so much. Thanks for having me on the show. Chainalysis is a blockchain analysis firm that is used to actually track funds that move on the blockchain. And so, when an incident like this happens, everyone turns to understand where are all the assets sitting now, and particularly for the administrators of FTX, in order to ensure that there can be the orderly, wind down of the operation and the return of as many customer deposits as possible. They use Chainalysis to be able to find those assets and discover how those can be returned to their due creditors.
Yeah. What about the exposure that you have though? Is it a bill that Chainalysis has due from FTX? Are you professionally or personally invested in or have funds on the exchange because you were studying cryptocurrencies at Oxford a long time ago? Maybe you're an early investor.
So Chainalysis, did provide software and services to FTX. That continues at this time so that they can actually understand where the money is going and where the money is coming from in order to best understand the position of assets. And what we have is the ability to help ensure that as funds are moving, that actually we can actually alert other people so that they can ensure that any of the funds that should not be taken out from the exchange are duly returned to the estate, and that they can have a process to return that money to creditors.
Yeah, and we heard about some of those stolen funds at the hearing today. One of the lawyers told the bankruptcy court that they have a substantial amount of assets that have either been stolen or are missing. So what are you finding when you're doing this tracking? What kind of activity are you seeing?
So we have seen the amount of funds that were associated with FTX wallets, and some of the funds that were taken at the time when this whole event was unfolding. And we've seen actually some of those funds start to move in ways which have been typically used to sort of obfuscate flows of funds. And we've seen swapping from one cryptocurrency into another, and all of that is actually able to be tracked using our software. And then we sell transaction monitoring software to companies like FTX and over 500 other exchange venues around the world, which can then get notifications if they are receiving some of those funds, and asset freezes can be put in place so that due process can be followed.
On the subject of different exchange venues, we saw in the aftermath of FTX's implosion that billions of dollars were yanked out of centralized exchanges. What kind of activity are you seeing in decentralized exchanges? How much are people rushing into self-custody?
So we have seen, volumes actually, come up in some of the decentralized exchanges. One of the things that, typically happens when you have decentralized exchanges is that, there's a lot more volume in times of high volatility. You have people, moving money between these venues to ensure that, prices remain sort of, normalized across the different venues. And so, we've seen, a tick up in volumes across decentralized exchanges. We've also seen an outflow to personal wallets, people actually taking money away from venues and making sure that they have control over their funds.
So when you see, a giant wallet like Coinbase holding all of its customer funds, has that just been emptied? Even if people think Coinbase is safe, I've heard a lot of people say they're still taking their money off the exchange and putting it into personal wallets.
I think I would separate this out into sort of institutional cryptocurrency transactions and retail transactions. I think that what we have seen is that some of the institutional players that have very large positions and who are sort of more sophisticated operationally have actually managed to sort of move some of the large sums of money that show in a lot of the data. I think when it comes to retail customers, and I think when it comes to trustworthy venues, you'll see that it's a matter of convenience for a lot of people that it's safer for them to have money inside a reputable and well-regulated venue rather than to assume all of the risks of custodying your own assets. And so, there's a couple of different stories playing out in the data that we see.
Jonathan, there are a lot of different stories about the hacked coins from FTX. Maybe they were moved on purpose for bankruptcy purposes, or was it a hack? Can you give us a definitive answer on what happened to those coins and quantify, the amount that left FTX, and do you know where it all is now?
So we can't give definitive answers on exactly what happened, and this will continue to play out over a few weeks, a few months potentially as this investigation unfolds. It is possible though to track all of the different money that actually left FTX as this whole saga went down, and we actually managed to see despite money moving across different bridges and in switching between different cryptocurrencies, that money is still able to be followed and still given as signals to exchanges to prevent that money from being cashed out using Chainalysis software.
And Jonathan, finally, a lot of regulatory scrutiny has been surrounding the fact that there's a certain lack of consumer protections in this industry. How should people protect themselves from the crashes of the future?
I think it's a really important conversation to be had around, how are we going to best segregate customer funds? How are we going to ensure that there is adequate protections and bankruptcy proceedings that do protect, retail investors and investors more generally? And, that is an ongoing conversation that has to be had with regulators. I think in the meantime, having consumers, have regulated venues where they are local in their geography and they have the right protections for the consumers. That is already possible in a lot of geographies, and I think people should look at those venues as places where they should be conducting their activity. And obviously, for the more technically sophisticated, being able to actually control your own cryptocurrency with your own keys, with your own backup phrases, is really sort of something that sophisticated consumers are flocking to at this time in order to ensure the protection of their assets.